What's up, guys? In this video we're going to be looking at the top stocks and penny stocks for this upcoming week. We've got a lot of major companies that's going to be reporting earnings that can affect the stock market significantly. We have companies that are multi-trillion dollar companies, so make sure you stay tuned to look exactly what are these specific companies reporting earnings and what time. We're also going to be talking about exactly what are the highest stocks that can potentially make a significant move when they report these earnings, guys. So also I'm going to be going over exactly an important report that can affect the stock market significantly for tomorrow, guys. I'm going to cover all this information coming up. Now let's get right into the video. Alright guys, so before we get into the video, make sure you smash the like button if you're new to the channel. Make sure you subscribe. If you have any questions or any comments, make sure you drop it in the comment section below, guys. So before we get into all the detailed information I'm going to be talking about, when we look at the performance of the stock market for last week, as you can see, it was significantly down. Specifically, the Nasdaq was dragging the overall market to the downside. Apple was down minus 3.85% for the week. Microsoft reported earnings. Even though their earnings was pretty good, it did sell off to the downside. Also, Google's going to be reporting earnings this week too, was sell off a little bit, 0.57%. Facebook down minus 4.68%. Their earnings is also coming up. And Amazon is also going to be the one that we're going to be talking about later on. But the major thing that was surprising last week was Intel reported earnings, and it's down minus 15.68%. So that was really a big move. This company does not make this kind of sell off to the downside usually in the past. This is due to their guidance. They say they're not going to be able to produce one of the chips. They extended the timeline for that for the next few years. That's why it sold off. And within the same sector, as you can see, we got AMD stock. It's up 26.09%, and that is really a surprising thing to look at. Usually in the same sector stocks, when they actually trend to the upside, they go together, and then when they sell off, they go to the downside. But however, this is a special occasions because they're in the semiconductor and they produce chips, and one of the companies did not do good for the future. They say they're going to postpone it, and the other company is going to be getting the share of the market that the other company lost, so that is why the stock eventually went up to the upside. And this is going to be an important lesson that we can use also when we look at the healthcare sector in the future. When these companies create vaccine to solve the current pandemic, the other companies that are doing research and getting a lot of fundings might not be able to sustain the growth that they did because another company solved the problem that a lot of people are needing the solution for. So that is one of the important things we can learn from this specific scenario that happened. So also in the healthcare sector, we got Pfizer, which is up 3.89% to the upside, mainly because the US government ordered a multi-billion-dollar contract for them to create vaccines and to provide vaccines for people for free. So that is why this stock eventually went up to the upside significantly. And the other sectors, for example, Gilead is also one of the companies that is getting supported by the government, but the stock eventually sold off. So this is one of the scenarios that happened within the same sector. One company might get promoted or might get a lot of funding, might get a lot of research funds from different governments or institutions, and the other one might not get it. So eventually you can see that they kind of not follow each other along. So keep an eye on these companies when they do this kind of things. Make sure you understand that there are going to be potential big sell-off that can happen in the future. If you are diversified in the specific sector, especially the vaccine stocks, eventually it's going to be one or two, three of them that's going to be successful. So now let's move on to the stock that's going to be reporting earnings for this week. Now, as you can see over here, this is the companies that are going to be reporting earnings on Monday, and Tuesday is going to be the one that's going to be major companies. A lot of people are going to keep an eye on these companies, specifically Pfizer stock. As you see, we talked about it, it's up 3.89%. It's going to be reporting earnings before market open. We also have McDonald's, we have 3M. But when you look at Pfizer chart, the stock is currently at $37.63, and there is definitely a resistance price point over here to try to break out, even though they got the funding from the government and they're going to start to break out to the upside, but it did not work out. And it starts to sell off to the downside. It's kind of pulled back a little bit. So it's a great opportunity if you believe there's going to be potential for the company. Other news might come out how their vaccine is producing, growing, and going to phase three, and it finally getting updated to FDA process and get accepted, and a lot of people start using the vaccine in the future. Then if that news comes out, it definitely can go to the upside again. So if you believe that narrative, if you believe in the company, that's a good opportunity to buy the dip. So we'll see exactly if it can break out of the price point over here and kind of consolidate and give us an opportunity to get involved in it. But right now it's pulling back over here, and there's definitely a resistance price point over here. So we'll see exactly if this stock breaks out after it reports earnings for on Tuesday before market open. So now let's move on to the other stock that we saw on Tuesday reporting earnings, going to be McDonald's. It's kind of moving in this price point area, and as you can see over here, it's kind of consolidating between $198 and $190 area. So it can break out, probably hit 210, or break down and hit 180. So that's a good price point. There's a good risk area we can use over here because it's consolidating within these two price points. So that's why I kind of like this chart over here. I kind of like this kind of pattern, which is super cool because you can risk off of the price point over here. So it's a very tight stop loss you can set up, and if it breaks out, it's going to go up pretty good. So McDonald's, keep an eye on this company, guys. So now the other company we talked about is going to be reporting earnings on Tuesday after hours. It's going to be AMD Stock. So broke out, had a clean breakout. It's currently at $69.40. So there's definitely a lot of eyeballs on this company. And one of the important things that you want to look for when you are trying to trade these earnings stocks is you need to be super careful, especially if you're trying to use options, because if you buy calls or buy puts, the implied volatility is going to be super high, and you might get crushed by IV. So that is a lot of thing that happen to a lot of people. So you need to be super careful if you're buying options, trying to buy calls or buy puts. Stay away from buying options in this period because the implied volatility is going to be super high, and that can lead to IV crush. Even though you can guess the right direction, if the stock doesn't go above the price point of the call or the put strike that you got, you might get IV crush. So be super careful, but it's definitely a clean breakout that it had, and a lot of eyeballs, of course, going to be on this specific company. So now on Wednesday, the major company is going to be reporting is going to be before market open. We got Shopify, we got Boeing, which is also moving significantly. We got Spotify also, that's been on the news a lot. Now let's look at Shopify stock. Shopify stock moves drastically, as you can see from the chart. It kind of have a triple top over here. It's set and it's pulling back to the $900 area. So this stock can move $200, $300 within one day with earnings. So keep an eye on this stock if you want to trade it after the earnings reports. That is the ideal for a continuation that we can trade. But this stock can definitely move significantly. So now let's move on to the other stock, which is going to be Facebook. It's going to be reporting earnings after hours. There's been a lot of news about Facebook, companies boycotting their ads, not running their ads on Facebook, and the stock sold off over here and it bounced back to the price point. So we'll see if their guidance is going to be pretty bad, because a lot of advertisements, they pulled their ads away from Facebook. So definitely this stock can potentially make a significant move either to the upside, but more likely to the downside, I believe. So it's going to be a support area, which is a $220 area, so we can use to get involved in it. So I always look at these companies for a continuation move for the second day after the report earnings. So the other company that we're going to be reporting is on Wednesday is going to be PayPal after hours. It's also a mover and a super solid company. So on Thursday, we have before market open, we got UPS and we got PNG, and after hours is going to be the major companies that a lot of people are expecting their earnings to be solid. So we got Amazon stock, which has a double top, as you can see from the chart, which is the 3,200 area. They tried to break out of that area, but it couldn't. It sold off to now it's currently close to 3,000 area. So we'll see exactly when they report earnings if they can potentially break out. But in the previous quarter, when they reported earnings, they did not hit their quota or their target. They did not beat it. That was very surprising. So it sold off and it bounced back again, but we'll see if they can potentially have a solid earnings this time around and if they can break out. So we'll see exactly how this company is going to look at, but a lot of people are expecting this company to beat earnings and have a solid upside move to the upside. So we also have Apple stock, which is pulling back to the downside a lot. It's down 4% for the week, but on Friday it was down only 2.5% to the downside. So it's a good opportunity for a dip buying opportunity if you believe in the company for the future. But of course, we have to wait after the earnings reports if you want to get involved in it. And if the worst thing that can happen is it can definitely go back to the $320 area if it sells off a lot, which is going to be the resistance, the support area we can use over here. So, but this company can definitely move if there's a surprise, but sometimes this company does not move too because of it does a lot of price action moves before the earnings, and during the earnings reports day, it really does not make a significant move, so that is one of the things that you need to pay attention to on Apple stock. We also have, we talked about Google is going to be reporting earnings. Gilead is going to be reporting earnings. And also on Friday, we got ExxonMobil, Abivi, and Chevron also going to be reporting earnings. Now let's look at what are the major moves expected. These stocks, as you can see from their implied options move, they're expecting 43.3% for this company on Tuesday, which is ticker symbol CARS. We also have BGFV. So some of these companies are penny stocks too. So option market makers are expecting a significant move to the upside, to the downside. So these are the hot stocks that can be super volatile, and people are expecting a lot of moves up. Now let's move on to the penny stocks that we're going to be talking about. So this is ticker symbol GNCA. Now this company, as you can see, is going up to the upside significantly. It's up 24.44%. It has an FDA related news coming that could potentially affect this stock to go to the upside. It's going to be for July 30. So definitely keep an eye on it. As you can see, the share outstanding for the company is going to be 29.14 shares, and the share of the flow is going to be 24.04 million shares, and the institutional ownership is 52% of the shares are held by institutions. So that is pretty good to see, and insider ownership is 0.2%. So they're trying to build a vaccine and also a therapy for cancer patients, and the drug they're trying to pass is also to help that. So keep an eye on this stock. It's already started to break out to the upside. Ideally, if you want to get involved in it, if it has a solid pullback to the downside, like for example, if it can hold the $4 area, and if it consolidate over there, we can risk off of the $4 area, but it's kind of overextended on the short term. We'll see what's going to happen before July 30 if the stock even pulls back for a good dip buying opportunity, expecting a potential move to the upside when they release a press release about the drug they're trying to pass through the FDA. So still a beginning stage of the FDA process too. So now let's look at exactly what are the important economic reports that can affect the stock market for tomorrow. For tomorrow, July 27, we got at 8:30 a.m. we got the durable goods order, just going to be for the period of June, and the previous period was 15.7%. And for also at 8:30 a.m. we got the core capital goods orders. It's going to be for the period of June, and the previous period was 1.6%, guys. So that's going to be all the information in this video, guys. If you have any questions or any comments, or if you're new to this channel, make sure you subscribe. Make sure you drop in the comment section below, guys. I'll catch you guys on the next video. Have a wonderful day.